name is Laban Cliff Onserio, coming to you live from the Kenyatta International Convention Centre, where we are having the launch of the Capital Markets Authority's strategic plan that we're going to move the authority's vision for the next 5 years, that's 2018 to 2023. We have an exciting program, of course. We'll be coming to you live on Top in Business, and we'll have NTV Today, of course, coming to you from this location, and also our 1 p.m. news. But before we get into the gist of the program, as we are, of course, awaiting the arrival of President Uhuru Kenyatta, allow me to just quickly welcome the audience that, of course, is comprised of the CMA's Board of Management and various stakeholders in the capital markets, to please give yourselves a round of applause for making time to be with us here today. From the audience, I also have an eminent team of panelists right up on stage. Beginning with my far left, allow me to introduce Paul Muthaura, who's the CEO of the Capital Markets Authority. Let's give him a round of applause. Next to him is Einstein Kihanda, who's the chairman of the Fund Managers Association of Kenya. And right next to me, on my left, is Paul Mwai, who's the chairman of the Kenya Association of Stockbrokers and Investment Banks, that's KICC. Thank you for being here. So the idea of this quick panel is just to set the stage and really set the tone for the day. Of course, we'll be hearing a lot from the government side and getting the whole vision of the Big Four agenda and seeing how the private sector can be able to plug into this. And what you see CMA doing is basically a word that has always been used around corporate circles, which is all about aligning to the entire vision of the country. And to just talk about, alignment and talk about the CMA's role in plugging into the Big Four agenda, allow me to just begin with Paul Muthaura to just quickly just set the stage into how CMA hopes to play out in these 4 pillars that the President outlined, and what to expect from you in the next 5 years.
Thank you so much, Laban, and it really is a pleasure to have everyone here today. It is a real milestone event for us today, launching our strategic plan for the period July 2018 through to June 2023. And fundamentally, in designing and structuring this strategic plan, the board of the authority was very focused on making sure that we're very well aligned, as you put it, to the key national agendas and priorities around development. Of course, there's the Vision 2030. Drawing out of the Vision 2030, there's the MTP3, or Medium-Term Plan 3 program. And then with the Jubilee government, what we have the Big Four agenda, which is looking at 4 key sectors that they believe will have the most catalytic effect on transforming Kenya into that upper middle income jurisdiction that we all aspire to under the Vision 2030. Now, within the Big Four agenda, you have 4 key pillars around affordable housing, healthcare for all, manufacturing, and then of course, food security. Now, when you look at the role of the capital markets, and as we'll go through in our discussions today, we have identified key tools, products, and strategies through which we'll be able to plug into each one of those 4 key agendas. But for this purpose, if I can just focus on housing for a case. When you look at the current onboarding or production of housing in the country, we're averaging about 50,000 a year, which falls very far short of the 100 to 150,000 units that we expect in any given year. That has resulted in a current shortfall of more than 2 million homes. Now, in order to compensate for that and really support the government's agenda around structuring affordable housing for all, we're looking at a number of key products cutting across traditional bonds, for example, by National Housing Corporation, being able to come to the market. But now with additional strategies, for example, the National Treasury establishing the Kenya Mortgage Finance Company, we'll start being able to have mortgage refinancing bonds also being issued. We've been working with our industry, and I think we're very honored to have just key speakers from our industry joining us here today, to look at how we can also operationalize and roll out real estate investment trust products that will have that critical role of not only supporting development, but also once these units are developed, being able to roll them into income-generating properties through income REITs. So this is one of a number of key tools that we see being able to play a role in supporting the Big Four agenda.
Thank you, Paul. And just also to get from the side of Einstein and truly see how, of course, this overall agenda plays in. The Uhuru Kenyatta signed into law the Nairobi International School. That's in 2017. Now, the authority has been tasked now with the establishment of a coordinated framework, that is, looking towards international financial center and also looking towards completing the existence of the domestic financing system, ideally, basically to fund the overall vision of the country. So in your view, while this is an industry-wide initiative, the authority has a key role in the whole formation of this process. Yes. So what is your view about the authority's main role in this, and how can this be implemented?
I think it's important in terms of the strategic plan to, the whole idea of the International Financial Center is really about and making it easier for international investors to come into our market. I mean, because we need to realize that we are competing with other markets around the region and also across the world. And so it's all about ensuring that there's a framework in place to ensure that it is easy for investors to come into the market. And just to give in terms of background, what I find very comforting is also the fact that in terms of preparing the strategic plan, there's also been a lot of input from players in the financial services, especially like ourselves, in terms of understanding what are the issues and obstacles that make it harder for investors to issue products. And for instance, if you look at the targets that are also in the plan, they are also very ambitious targets as to where, for instance, we expect the collective investment schemes to be in terms of value by the end of 2023. And that for us is very ambitious, and I think it's in line with ensuring that we're able to mobilize capital. So there are quite a number of initiatives that have already been mentioned. For instance, green bonds. There's also looking at ensuring that it is easier, for instance, when it comes to economic, social, governance framework for issuers coming into the market. And this is important because it gives confidence to investors that they're going to invest in products that have already passed through a very robust mechanism to ensure that investor interests are protected and that there's credibility in terms of the issuers that come into the market. So what we see is encapsulated in this strategic plan is to making Nairobi a very competitive market and making it competitive compared to other markets across the region.
All right. And Paul, just before we get to you, I should mention that we actually have a clip that will set the stage and kind of set the scene for us all to see how this whole project ties in and the next 5 years looks, especially in the sector. Before we play that clip, might quickly, Paul, from your side, it'll be just talking about the agricultural and mining commodities ecosystem. If you could just give an overview of that and really how we can actually look towards how effective it is and how we can also be able to create opportunities for both agricultural and non-agricultural commodity prices on that.
Okay. Thank you, Laban. Allow me first to congratulate the Capital Markets Authority Board and Management on the launch of their strategic plan and to pledge the support of the investment banking and stockbroking fraternity to support in the implementation of this plan. In terms of the commodities market, we are excited that this has now become under the armpit of the Capital Markets Authority, and it is part of their strategic plan going forward. For a long time, it's perhaps been something that we've talked about, but haven't had the opportunity to realize. The clear advantages is that commodities market will allow price discovery and will allow the development of efficient markets. Efficient markets would mean better information for farmers who are producing the commodities or for the miners, and that will will effectively do what we call closing the arbitrage gap, because the arbitrage gap is where middlemen play, and that's where they make profits, sometimes to the extent at the expense of the key producer who is perhaps the one driving the growth in the economy. So we are very excited. We are also looking at the development of warehouse receipts. This will provide farmers with the opportunity to have a receipt that they can take to the bank and perhaps borrow against it, enabling them not to have to sell just to finance their day-to-day needs. They can time their sales or whatever. But what's more exciting for us is that from the spot you then move to the derivatives. A derivative market is actually a very important tool in transferring risk from those who don't want the risk to those who want the risk. And effectively what that would do is that with the derivatives market of the spot commodity, a farmer will be able to sell his crop, which he expects to harvest in 3 months or 6 months' time, at a price predetermined. He will therefore be able to determine his price and effectively hedge away the risk of the fluctuation in the price of the commodities. So I think this is critical to empower the farmer and to empower the growth in terms of enhancing our food security.
All right. Thank you very much, ladies and gentlemen. Please appreciate my panelists for that first round of questionings. So at this point, as I promised, we have a clip that will just give you a sneak preview into what we have lined up for you. So ladies and gentlemen, please turn your attentions to your screens.
The Capital Markets Authority new strategic plan 2018-2023 coincides very neatly with the renewed term of His Excellency the President and the Jubilee National Government. And in that regard, in developing the strategic plan, we took careful note of the President's Big Four agenda of affordable housing, universal healthcare, manufacturing, and food security. In looking at each of those agenda items, we can see that the capital markets in Kenya can play a key role in enabling the implementation of the Big Four agenda. We can provide both the raising of finance, but also the facilitative environment, whether it is the commodities exchange or the real estate investment trust, among others.
One of the most critical considerations of the board in reviewing and developing this strategic plan was to make sure that it was very well aligned to the key national development agendas that are operating in the country. We've actually scoped out all the key areas that we think the capital markets may serve to have a very significant impact in the delivery and implementation of that Big Four agenda. Now, without doubt, it is very strongly aligned to the Vision 2030, and in fact, it has been adopted as a flagship project under the Medium-Term Plan 3. The board was very pleased to note that, having been a flagship project with the implementation of the 10-year Capital Markets Master Plan within the MTP2, that has then also been carried over into MTP3, also recognizing at national level the critical importance that the government is seeing of the capital markets in supporting long-term economic transformation and socio-economic development. What's significant for us is this is our 5th strategic planning cycle, and it really builds on a very strong journey the authority has had on setting down very clear performance delivery objectives and consistently measuring ourselves against those targets to make sure that we're actually able to effectively impact the intended growth and deepening of the capital markets in Kenya.
Initially in the 1990s, 2000, investors were looking at capital markets products as assets where you just buy your shares and go and keep them. The current investors are very different. They are looking at capital markets as a vehicle where you go, buy, sell, so that you are focusing more on the turnover as opposed to just buying a security and going.
The board really has implemented or identified 6 core strategic objectives that are going to guide the direction we're going to be moving in. Those adopt, I think, a number of broadly areas that are very consistent with what has already been in place in terms of targeting key deliverables on putting in place an appropriate legal, policy, and regulatory environment, as well as looking at areas like market infrastructure and the quality of market infrastructure we have in terms of attracting the right scope of both issuers and investors to our market.
Another key area that we are looking at that's different in this strategic plan 2018-2023 is on the strategic influence. We realize that we have made quite some positive steps in influencing policy, especially international policy, through membership in institutions such as the International Organization of Securities Commission. But we want to start doing that at home. We are now moving from being a frontier market to an emerging market. The difference between a frontier market and an emerging market is that once you attain an emerging market status, there's a lot of capital inflow that we'll be able to attract. Because effectively it is said that almost $1 trillion US dollars is there waiting for countries that have achieved the status of an emerging market.
So digital financial supervision by the regulator through the application of the likes of SupTech and RegTech would help to computerize operational procedures and have more streamlined real-time monitoring of an oversight over our licensed entities.
Our approach, first of all, is to focus on fintech that is directly related to the capital markets. And in doing so, we are going to apply the regulatory sandbox model. In this model, we are going to have innovators in the fintech space, but specifically on the capital markets, getting into some kind of regulatory space whereby we are going to allow them to test their innovation with very limited or less onerous regulatory requirements.
When we talk about infrastructure, we are talking about a whole system that starts from where the investors who have interest in securities are sitting to the market, if they are getting in, but if they want to get out, how then they go to the market, the process of them getting back their value. We also talk about investor protection. How do we make sure that the people who are transacting within the capital markets are well protected, and therefore no one is taking advantage of someone else because of the advantages they have?
I think as we look at the way forward, at the core of this, we remain very conscious that as an authority, our greatest asset is our people.
We want to ensure that even as we go into the next 5 years of our working, we have a team that understands and believes in and actually practices creativity, innovation, and transformation in the way we work. Uwezo Kipeo has been very key and is a focal point for us in ensuring that we move from a process perspective to focusing more on an outcome-based perspective.
There's a fundamental focus within the strategic plan on making sure that we're building the right team with the right skills and with the right kind of environment for them to be able to really perform to the levels that are going to be necessary for Kenya to be able to achieve the goals in the 10-year capital markets master
Thank you very much. Of course, that is just the overall view, and I really want to appreciate the board, right from the chairman and to the team that is also behind the CEO. So ladies and gentlemen, one more time, let's give a round of applause to the CMA team for that, and wishing them the best even as they chart the way forward. Allow me to shift gears and just move away from CMA and of course from the panelists on stage. I'll come to you for the closing remarks, but really quickly, most of the people you actually saw in that clip, some of them are well represented at this audience, and of course various stakeholders in the private sector. But allow me to just get a quick intervention. We have a roving mic. First, to begin with, I'm going to ask Madam Helen Kariuki, who's the CEO of the Unclaimed Financial Asset Authority, to also just give a view into how, you know, she fits into the overall goal. After which, I'm going to hear from the manufacturing sector. That's from Pradeep Orana from MRM. ARM, sorry, and then after which I can hear from Madam Rose and Jeff to close up on that. So please stand, Madam, and how are you plugging into the overall vision?
First, I'd like to thank CMA and congratulate them for a very well done strategic plan. And when I look at it, it's very exciting. Their first strategic focus is on a facilitative and responsive regulatory framework, and it's all geared towards improving the investor experience. For us, the investor experience is very important because when we look at the shares that we hold, it's all part of that investor experience. And for us, we would like to tap into ways that we can partner with the Capital Markets Authority to ensure that the unclaimed financial assets mandate is well carried out. And that just drives into the strategic alliances. We do have an MOU with the Capital Markets Authority, and that will really sort of link those two things together. Over and above that, they have a strategic focus on technology, and we'll be looking at the operational efficiencies as well, and how we can just get synergies around that. Thank you, and well done for a great strategic plan.
Thank you, Madam Helen. Appreciate it. Pradeep, manufacturing is also a big four, and you're a key player in this, so over to you for your input.
Thank you. Congratulations to the CMA and a strategic plan which essentially enables the Kenyan capital markets to channel long-term funds for the manufacturing sector and the Big Four agenda. What we really need in this market is the long-term funding available for our housing projects. In most developed markets, the biggest wealth in the country is a real estate. If we are able to channel through the capital markets a program that enables real estate developers, housing owners to raise mortgage-backed securities listing on the stock market, that will boost manufacturing sector tremendously, because the linkages between infrastructure, between housing and manufacturing is intimately connected. So I'm looking forward to this exciting development. I think this would be a great news for manufacturing and all other sectors of the economy. Thank you.
Thank you, Pradeep. Before we come to Madam Rose, I don't know if Jeremy, you want to give an input on behalf of the banking sector. You're a key player also in the financial space. I saw also Madam Nassim in the house, but you can represent the entire team of bankers here.
Yeah. Firstly, congratulations also to the CMA, the board and management. For the financial sector, it's imperative that we have broad and deep financial markets for multiple reasons. For our corporates, it's imperative that they have different ways of raising financing rather than just relying on bank loans or bank debt overdrafts. Yeah. So obviously we've seen and we assist many of our clients to raise debt, you know, and that's typically been the form that we have looked at. But then also we want to be able to see growth in the secondary markets, yeah, trading of that debt so that people can move in and out of those markets, because in many instances you've got foreign investors who are also interested in funding businesses, but they're also quite concerned about how they are able to enter and be able to leave to get the returns that they need for their own investors. So we're very keen, and I know the strategic plan addresses the development of secondary markets. I think the other aspect which I think is exciting is the aspect of risk management solutions. We've seen there the development of derivative products, forwards, futures, swaps. These are all essential for businesses to manage risk, you know, over the different risk and time horizons. So the fact that we now start having frameworks and mechanisms to be able to give those solutions to customers, I think is important. I think lastly, obviously, as we see our own homegrown entities, SMEs become bigger and bigger companies, we would obviously want to see them listing. And that is important because as they list and grow, and we just need to look at Safaricom as an example, it allows Kenyans to invest in shares in those companies and diversifies out the savings base and the investment base to give people different avenues of return. So for us, as the banking sector, we're a very key partner to the CMA, to the NSE. We are here to provide whatever support we can and encourage our customers to take advantage of the many opportunities and the many development areas within the strategic plan. Thank you.
Thank you, Jeff. Sorry, Jeremy, I wanted to also get that challenge, especially to you, Jeff, especially on how CMS can come in to that. But before we get to hear from Geoffrey Odundo, Madam Rose, yours is on the impact of technology and adoption of the capital markets. And yes, if you could please stand and then progress on.
Good morning and thank you. I'd also like to echo the congratulations to CMA. When I reflect back on the journey that we've traveled together from the time that we thought or started on the automation process of the market. At the time we were simply thinking of moving from manual transactions into an automated environment, and I think the last 15 years have been heavily focused on just making sure that we continuously eliminate risks associated with manual transactions. I think going forward, I'm happy to see that there's a key pillar within the strategy that's focusing on IT and technology advancements. When you think about developments across the globe, people are talking about big data as the next oil, actually. And it's key that we actually focus on how big data can help us move our services to the next level. And a prime example of that actually has been the Emma Keeper product, really seeing how can we enable a larger number of Kenyans participate in the stock market. We've got developments in artificial intelligence and robotics still moving further along the chain of eliminating manual intervention in every process of the transaction. And these kind of developments are what can help us move towards shortening transaction cycles and making them more efficient so that we're able to increase turnover and increase access to the market for a larger number of people. We are also talking about blockchain technology. The significance of the immutable record within capital markets transactions. What's the impact of blockchain technology on our operations? How can we leverage that to ensure that our records are actually the final record and they are immutable records, and thereby eliminating elements of fraud or hacking and that sort of thing. So I think I'm very excited about the proposals within the strategic plan. About IT and the IT focus, and I just want to say that as CDSC, we are actually aligned in our thinking with CMA and the rest of the industry towards leveraging on technology to ensure that we are able to move our market to the next level.
Thank you, Rose. And Jeff, over to you just for, how can we have more companies listing and of course adoption of technology at the NSE?
Thank you very much, and I also want to add my voice and congratulate Paul and board and for this launch of the strategic plan. I think for us, what stands out is really how we've been able now to make a paradigm shift from a market where we were trying to automate and increase trading volumes to creating a market that's going to be an alternative funding channel. And hence, when you look at the various key strategic imperatives, I think the one that stands out is how we've been able to map the strategy to the Big Four agenda, and specifically the objectives that we can achieve under those Big Four on food security, on manufacturing, healthcare, and housing. And we have been able to develop products on each of those key pillars that can actually deliver and support the government achieve those programs. The second thing that I think we see that's going to be helpful is that now we are moving away from just listings, but focusing on uptake. Now uptake on both sides, on the issuer side and also on the investor side. And very deliberately between us and the CMA, we are working on programs towards ensuring that initiative is achieved. The third and the very critical one is around public awareness, and not just doing this in form of the normal traditional way, but using technology as a lever to educate the public. Rose has talked about Akiba, which for the very first time, over 300,000 Kenyans now know what a bond is, and it's not just a police bond. So that alone was a very key success for Akiba. And finally, around technology, I think that's the directions the markets are taking. How will we then leverage on the new technology that's coming in terms of providing financial access, in terms of reaching out and education. So I think from the NSC side, we're very aligned to what the CMA wants to achieve, because it's also what we are looking at going forward. So once again, congratulations, and we look at supporting you further. Thank you.
Thank you very much, and thank you to everyone again who gave their input in this intervention. Let's give them a round of applause. I would want to actually pass the mic around. I saw Madam Boy in the house, so Polika Pigatha as well. Bo Karina is right here. I would want to make this a very engaging session, but really quickly, because we have to break out on top in business, allow me to just get a closing remark. You've seen, well, the stakeholders in the sector are aligned, and from your view, you also represent, I know your seat, especially for Paul and Einstein, you represent many other stakeholders in the industry. So before I come to you, Paul, just for the quick wrap up, allow me to start with Paul. Just really briefly, what stands out for you, and as your closing remark, what would be your key takeaway, even as we chart the way forward for the next 5 years?
Thank you, Laban, once again. And for me, the most exciting part of this is the push towards moving Kenya into an emerging market. When we look at those who have achieved emerging market status in the past, there are certain critical things that have resulted in them achieving that. One critical thing has been they have developed a very significant local investor base. And that's one thing that we need to work on. And perhaps the two key things that would be emphasized on this is, one is investor education and investing the Kenyan public on the importance of the capital markets. And number two is to leverage on technology to expand our reach in terms of building that local investor base. The second thing is investors' speed, the efficiency of going into market and getting money. When an investor comes to you and tells you he wants to raise money, he wants that money yesterday. So you need to be able to give him good time frames. And that has been a critical factor in those markets that have made it. And we probably need to adapt that and look at how we can benchmark ourselves, both by building capacity from the service providers and from others, in terms of how we can shorten the period from when the investor says he wants to raise money from the capital markets to when he receives his check.
All right. So, Einstein, over to you on behalf of fund managers, your key takeaways for today.
I think building on what Paul has just mentioned about the key objective and the goal of the CMA in terms of achieving recognition in the MSCI Emerging Market Index, I think for us that brings in quite a number of pillars, and I think it's joining one of the 23 economies that are within that index means that there will be a lot of significant development on various areas. One, I think, is in terms of product development, because as fund managers, what we are really looking at, we represent the investors who are looking to invest in these capital markets. And one of the things that we don't have and we continue to struggle on is really about the product, availability of products to invest in. And therefore that provides, when you look at the strategic plan, there are quite a number of objectives listed there to look at developing these products. And I think that's very important for us because it helps us in terms of being able to offer our clients a wider variety of investment opportunities, especially in the domestic market, because we've seen that a lot of the investment that we are seeing in the capital market there's significant foreign investor participation, but I think it's also creating an environment to make it easier for domestic investors to invest. And these are the investors that we represent. So for us, it is a very ambitious plan, and we commit to be supporting the Capital Markets Authority in achieving it.
Great. Yeah. Paul, you're a host today, and all eyes on you. So what shall we expect?
Very much linking the points raised by Paul and Einstein is really at the foundation, cutting across all the strategic objectives of the plan, is the focus on how do we improve what we're calling the user experience. And user experience for us here is cutting across the issuers, so that we can introduce the product that's necessary, the investors who are going to take up that product, but critically also the intermediaries. All the nuts and bolts and the plumbing of our system. How do we make sure that all are working and all are really having the most positive and constructive experience of being a component of the capital markets so that we can deliver the economic transformation we're looking at, that we can start raising the kind of financing that's going to be necessary to move the nation to the next level, but also to make sure that we're able to plug into our role in ensuring Nairobi emerges as a truly competitive global international financial center.
Thank you very much, Paul Muthaura. Thank you so much, Einstein Kihanda and Paul Mwai. Thank you so much for your time, and to the audience, let's appreciate ourselves for being here in the first bit of the program. To our viewers who are watching us from at home, this is basically a curtain raiser on what to expect today, especially as we wait for the arrival of President Uhuru Kenyatta to come in and, of course, unveil the strategic direction for the authority and, of course, for the entire industry at large. And it's also exciting to note that the support from the private sector is overwhelming. Remember, Top in Business is a joint initiative project by NTV and the Business Daily, and of course we'll set camp here. We're taking a break shortly, and later on we'll be back with NTV Today with my colleague Hudhaifa, and to also just give you an overall picture on the state of the economy, after which we'll cross over to this side of Savo Ballroom, where we'll first get the official unveiling. My name is Laban Cliff, of course coming to you live from the Kenyatta International Convention Centre. Stay tuned to NTV because we have a lot more lined up, especially in the business front.